What kind of got you so jacked up about buying the properties that you've bought? Like you have a bunch of them,
Yeah.
right?
To be honest, it's a part of savings,
Right.
and also building the portfolio as well, right? So it's actually inspiration for my uncle. He was a psychiatrist, but he was a real estate investor. So you don't buy it for today, you buy it for the future. So it's all about long term.
Right.
So we bought our first house in 2007 for $217,000. In a good market, it went up to 1.1, 1.2 million.
Huge.
But it goes to tell you, like, it's not for a short term; it's for the long term.
Yeah.
So I believe in buying, but I don't believe in selling for a short term gain. But I always look at the future.
Yeah, exactly.
I think that's a lot we're going to talk about today.
Yeah,
What's
exactly.
the real
Yeah,
estate about.
yeah. Because both of us have very strong belief, and I think that's the way it should work. Is like real estate investment is for long term, right? And we know as we're experiencing right now, we're going to go through these bumps up and down in
Exactly.
the market. But in the long run, we're seeing long run, like even like say like like some land developments that I've got involved with, or land holding, let's call them. They're not even developments. But the thing is that I'm investing my money in here right now, and I honestly don't even expect to get anything out of this in like 15 years.
You just sit tight.
Yeah, I think it's going to be like a 15 or 20 year kind of thing. But we have a long term vision of where things are going. I think that if we look at it from day to day to day, I think we would be very scared to kind of invest, right?
100%.
Yeah. So
And we literally dealt with all the investment issues 2 years back when the COVID hit. The tenants are not paying rent; they can walk away from it, or they can live without paying rent. So there's so many issues we dealt with, and we are going to deal with as well, right?
Yeah.
But what comes down to if you can hold on to the investments.
And that's a good point. So the thing is that it's like what we also believe in is long term, and to being able to hold on to it. So I think like in a way that we're thinking is that we're not over leveraging ourselves. Fine. I think even I can speak for myself. Like a lot of times I come very close to that line, and maybe I've crossed it a little bit, but then I'm always trying to get back on the other side, right? Because what we talk about is that if market conditions change for whatever reason, something happens, we have to have holding power, right?
Absolutely. And I think a lot of investors, they kind of do not understand they don't know why they are buying the investment properties. They don't know it's a short-term goal or a long-term goal.
Yeah. And I think that's a question where we start off with a lot of people.
Yeah.
And we try to share like some of our advice as well. And I think that a lot of people in the last like say 10-ish years have seen pretty big gains on properties, and it's been kind of like up and down still with that. And I think when people kind of get attracted to it, they kind of see that $200,000-$300,000 gain over, let's call it like 2-3 years or whatever else like that. And it's obviously big money for that to happen. But I think the differentiating factor is that being a disciplined investor, you kind of know that, hey, that's great that I got this bump, but I'm not counting on that bump kind of going forward. Do you know what I mean?
Some people, they kind of cash out the bump, right?
Yes.
I think and they regret for selling it after a few years later.
Yeah.
That it could have been even gone up in value.
Yeah. Like I have never ran into anybody that tells me that I have regretted selling that, or I'm glad I sold that property 10 years ago. I've never ran into anybody.
Everyone has a regret.
Yeah. Nobody has ever told me, wow, thank God I sold that thing. Yeah. Everyone's like, oh, I should have kept it.
Kept it, exactly.
Even my first property, I bought I don't want to say ghetto, but like a not such a great condo at Kenny and 401 when I was 21. It was $116,000 when I bought it. But even then, like I'm like, I wish I still kept that. Like, fine, it's maybe, I don't know, I haven't checked in a very long time, 450-ish for that property or whatever, but I wish I kept it.
I think it's okay you sell it, but it depends on what you're going to do with the funds.
Exactly.
Like if you're going to go and reinvest into something else, because some other investors I have seen, they multiply the returns by buying more units or more properties. They have double the money, but some people, they go and spend the money.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.